What's on the agenda for the 16th Finance Commission? India's federal structure of governance allows the centre to collect most of the important taxes. But a lot of expenditure falls in the states, which means they also need to be helped with a commensurate portion of tax revenue. So what portion of taxes should the centre share with the states? This is exactly the question that the Finance Commission decides every 5 years. In this line, the 16th Finance Commission was constituted on 31st December 2023 with Shri Arvind Pangaria, former Vice Chairman Niti Aayog, as its chairman. In today's episode, we will explore the 16th Finance Commission and its crucial role in India's economic framework. Established under Article 280 of the Indian Constitution, the Finance Commission is tasked with the devolution of the consolidated fund, ensuring balanced financial distribution across the nation. 16th Finance Commission, shaping India's fiscal future. Since the 73rd and 74th constitutional amendments, local bodies like panchayats and municipalities have gained significant recognition within India's federal system. These amendments introduce clauses that mandate the Finance Commission to recommend measures to augment state consolidated funds to support these local bodies. Cities are often described as the engines of growth. While this view is somewhat narrow, the reality is that cities contribute around 66% of India's GDP and about 90% of total government revenues. Yet the financial devolution to cities remains inadequate. Rapid urbanization without appropriate fiscal actions has adverse effect on the development. The World Bank estimates that $840 billion is needed for the basic urban infrastructure in the next decade. Despite efforts by the previous commissions, the fiscal health of municipalities is poor, affecting both city productivity and quality of life. Intergovernmental transfers or IGTs to urban local bodies in India are about 0.5% of GDP, much lower than 2 to 5% typical of other developing nations. For example, South Africa allocates 2.6%, Mexico 1.6%, the Philippines 2.5%, and Brazil 5.1% of their GDPs to their cities. Increasing the quantum of IGTs is necessary to watch international standards. The introduction of the Goods and Services Tax has reduced urban local bodies' tax revenue, excluding property tax, significantly. While IGTs make up about 40% of urban local bodies' total revenue, issues persist regarding their predictability, earmarking for vulnerable groups, and horizontal equity. Parallel agencies and bodies have been undermining local governments both financially and operationally. Programs like Member of Parliament Local Area Development Scheme or MPLADS and the Member of Legislative Assembly Local Area Development Scheme exacerbate this issue, distorting their federal structure. In the absence of 2021 census, reliance on 2011 data is inadequate for evidence-based fiscal devolution. Accurate and updated data is crucial for capturing the dynamics of urbanization and migration patterns, especially to Tier 2 and 3 cities. A McKinsey Global Institute report warns that if India continues investing in urban infrastructure at current rates, there will be significant shortfalls leading to the water supply issues and untreated sewage. The 16th Finance Commission must consider these challenges and ensure that IGTs to urban areas are at least doubled. The 16th Finance Commission should revisit the principles laid out by the 15th Finance Commission, focusing on the enhancing property tax collection in tandem with the state's GST, maintaining accounts, allocating resources for pollution mitigation, and prioritizing primary health care, solid waste management, and drinking water. The 16th Finance Commission has a significant task ahead. By addressing these critical areas, it can pave the way for a more balanced and sustainable economic future for India. Stay tuned to our channel for more such updates and in-depth analysis